You should be crossing your fingers. Good luck to the short-term investors. The challenge in this market right now is the macro forces are so large and they're so idiosyncratic and so unpredictable. We could have a tweet sometime in the next 10 minutes that sends the market plus 5% or down 5%. I think it's extraordinarily difficult to be a short-term investor in this sort of market activity. I'm extraordinarily bullish for the end of the year. I think we're going to see a relatively significant decoupling between Bitcoin and equities. I think you're going to see Bitcoin move to new all-time highs, and Bitwise's prediction from December of last year that we'll get to 200,000 on Bitcoin, I think still is plainly in sight. What do we need to have that happen? We need the macroeconomy to settle down a little bit. We need maybe one of these rescue packages to start to come into the market.
According to Hougan, the long-term setup for crypto is extremely bullish. Bitcoin continues to experience strong capital inflows, reflecting increasing investor confidence. On the Ethereum side, and among other assets, he sees growing demand due to an accelerating loss of faith in traditional institutions, rising stablecoin usage, and the emergence of tokenization as a powerful trend. These foundational elements point toward a prolonged bull market. For Hougan, crypto remains a generational opportunity, and despite short-term turbulence, the larger trajectory remains up and to the right.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think crypto is all about short-term versus long-term right now. Long-term, everything is lining up for a sustained bull market in crypto. We see continued flow into Bitcoin. We see continued loss of faith in institutions. On the Ethereum and other asset side, we see rise in stablecoins, rise in tokenization. All of that's looking great. But of course, we can't look past the short term. So most of us spent our weekend tracking the latest, over and back on tariffs, wondering how much macro chaos there will be in the market right now. I really think investors need to decide, are they short-term investors or are they long-term investors? Those have very different feels in the market right now, and that's sort of the mix I'm trying to weigh myself as I look at these markets. You should be crossing your fingers. Good luck to the short-term investors. The challenge in this market right now is the macro forces are so large and they're so idiosyncratic and so unpredictable. We could have a tweet sometime in the next 10 minutes that sends the market plus 5% or down 5%. I think it's extraordinarily difficult to be a short-term investor in this sort of market activity. So I'd be monitoring the macro situation. I'd be monitoring every tweet coming out of Washington, and I'd be wondering what's going to happen next. Maybe keep an eye on the 10-year interest rate, on the dollar weakening. It's a very difficult environment, I think, for short-term investors. Yeah, I think in the short term, it's signaling just that this is a very volatile market. I think as you extend out a little bit, it can't be positive for the global economy in the medium term. That's what you're hearing from everyone out there. And you're in this difficult situation where we're clearly breaking something in the existing economy. We're clearly slowing down global trade. We're clearly weakening the dollar. We're clearly introducing uncertainty. That is a negative setback. And there's this waiting game to see when the Fed or the Treasury will step in to inject liquidity into the market, will give us a new sort of recovery program. The challenge about us, where we're sitting from a short-term perspective, is all the signaling coming out of the Fed and out of the Treasury is we're not going to do anything. The market is functioning. It may be challenged, but it's functioning. So whether it's former Fed governors writing pieces for Bloomberg, even Janet Yellen adding her thoughts on the market earlier today, they're all saying this is not the responsibility of the Fed and the Treasury. So I think investors are sort of playing this waiting game. When will people come to the rescue? And the people who usually come to the rescue say, not yet. And that, I think, gives us a negative bias in the short term. So if I were guessing, I think there's more risk than opportunity until we see the Fed or the Treasury ride to the rescue, and there's just no sign that they're planning to do that right now. Well, eventually the likelihood is 100%. Eventually they can't resist the big red button. They've been taught over time that when there is market uncertainty or economic uncertainty, you have to come to the rescue with liquidity. I think if we see more challenges in the treasury market or a disorderly sell-off in the dollar, I think you'll see them step in. So it's going to happen eventually. But I do read from the signaling that it will be slower than many people expect. So this uncertainty could certainly stretch for days, maybe it could stretch for weeks, possibly it could stretch for months. I think we're in for a relatively significant period of volatility in the markets before those forces ride to the rescue. But make no mistake, eventually this is a political game and eventually they will ride to the rescue. It's just a matter of when. It will happen, but I think it could take a little bit longer than people have been conditioned to expect in the past. I mean, there are any number of catalysts. So I'm extraordinarily bullish for the end of the year. I think we're going to see a relatively significant decoupling between Bitcoin and equities. I think you're going to see Bitcoin move to new all-time highs, and Bitwise's prediction from December of last year that we'll get to 200,000 on Bitcoin, I think still is plainly in sight. What do we need to have that happen? We need the macroeconomy to settle down a little bit. We need maybe one of these rescue packages to start to come into the market. I think if we see either of those things, this market is primed to rip. If you look at how Bitcoin in particular has been performing over this market pullback, it's done significantly better than in previous stock market corrections. Usually when there's a stock market correction, at least for the last 10 years, if the stock market is down 10, Bitcoin is down 30. Instead, this time, Bitcoin is more or less keeping pace with the equity market. To me, that's an incredible sign of resilience and strength. 2 years ago, if I told you that the global economy was falling apart and Bitcoin would be at $84,000, you would have laughed at me. And yet that's what we're seeing. So as soon as we see some signal that the economy is going to stabilize, that macro will get out of the headlines, I think we'll quickly be to new all-time highs. And if we do see any sort of stimulus or the Fed or the Treasury stepping in, I think it's off to the races and on towards Bitwise's $200,000 target. Pretty unbelievable. I entered into Google to figure out what happened in 2018, and it said that the market pulled back due to Trump's tariff wars, a weakening dollar, exactly the same things that we're living right now. And I think that's important for people to remember. We have been through these sort of market crises. We have seen what happens in the crypto market. Look, crypto is in a generational, multi-decade bull market. We can have these short-term challenges that set us back, but long-term, the forces powering this industry forward are going to overcome and overwhelm that. So it was fun to flash back a handful of years to the previous Trump presidency and see that, we have experienced this before and there is light at the end of the tunnel eventually.
Hougan also touches on the long-term price trajectory for Bitcoin, anchoring it to gold. He views gold as a proxy for demand in hard money and store of value assets. As gold sets new all-time highs, Bitcoin's long-term ceiling continues to rise as well. A few years ago, parity with gold meant a Bitcoin price target of $800,000. With gold's market expanding, that target has now climbed to $1.1 million or more. Some analysts have even floated gold reaching $4,500 to ounce, implying Bitcoin could soar as high as $1.5 million over time.
That tells me is that Bitcoin's long-term price target is going up. Right? Gold is a proxy for current demand for hard money assets, for store of value assets. When I look at Bitcoin's addressable market, I assume it's going to match gold in about 5 to 10 years. So as gold's addressable market goes up, the long-term price target for Bitcoin goes up as well. The reason Bitcoin is down is because it's both a hedge asset and an emerging risky asset. So what we've seen historically in the short term, when there's market volatility, you see Bitcoin pull back with all other risky assets. But in the long term, it catches up and then some. So every time gold sets a new all-time high, I cheer. It means that Bitcoin's ultimate all-time high is ticking up. It used to be 800,000. Now to match gold, maybe it's 1.1 million. I saw today there's a prediction gold could go to 4,500 out of, I forget, it was Goldman Sachs or JP Morgan. If that's the case, you're talking about 1.5 million Bitcoin. So gold sort of forecasts the direction Bitcoin is going long term. Again, we just need this market risk to stabilize a little bit, and you're going to see Bitcoin catch up and then some. I think 5 to 10 years is about right. I think 1 or 2 more cycles. Look, a few things are true. The vast majority of people who need to own Bitcoin don't yet own it at all. We need $1 trillion of buying into the Bitcoin market for institutions to just level up to a neutral portfolio. I think there's no way that happens without pushing Bitcoin's price up significantly. I'd also say, having watched various technologies over the past 20 or 30 years, everyone's always skeptical of the digital version of analog goods. But find me another industry where the digital version didn't just catch up, but eventually surpassed the physical good. It's happened in media, it's happened in advertising, it's happened in movies, it's happened in streaming. It's going to happen in store of value assets. So how long could it take? I think 5 or 10 years, right? Remember, 10 years ago, where was Bitcoin right now? It was 2014, it was trading for a few $100s. Today, we're talking about $100,000. It's not that hard to imagine that in 10 years, it's easily at $1 million or more. I think it'll happen by 2029, but it could be anywhere around then. But all the trends are pointing in that direction from where I sit. There are two places I think are extraordinarily attractive right now. I think this remains the best risk-adjusted time to purchase Bitcoin in its history. We've removed a huge amount of risk. We've removed custody risk, trading risk, regulatory risk, government risk, and yet we still have 10x upside at a minimum. To me, that makes an extraordinarily positive expected return from a risk-adjusted basis. I think any investor who doesn't have Bitcoin in their portfolio should take this pullback to establish that first position, at least get to 1 or 2% Bitcoin, maybe 10 more if you're more bullish. The other place that I find extraordinarily attractive right now is all the way on the other end of the spectrum at the DeFi protocol layer. I continue to think we're setting up for another DeFi summer at some point. You look at various statistics, they're already at all-time highs. Those are proven programs. And if we get regulatory relief, I think there's a lot of value in some of those DeFi specific protocols. So a barbell strategy that's Bitcoin and then a handful of DeFi protocols, I think would be extraordinarily well positioned for the rest of the year.
Hougan thinks we're looking at a 5 to 10 year timeline. He estimates that $1 trillion of new institutional capital still needs to enter the market just to reach neutral portfolio allocations. As that money flows in, the price of Bitcoin could rise dramatically. History supports this view. In 2014, Bitcoin traded for a few $100s. Today, we're talking about $84,000 during a global economic slowdown. Projecting forward to 2029, it's not hard to imagine $1 million Bitcoin. Please like and subscribe.